Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock with news that official rates have been under review around the world. Yesterday's Fed hike was supported today by stronger than expected retail sales data, and prior months have been revised higher too. Following the US Fed hike, the Chinese central bank has also raised rates, but their move was marginal and highly selective. Their rises were just 5 basis points, and pointedly, they did not move the benchmark interest rates that banks charge on loans to retail and corporate borrowers. China is fearful that such a tightening would over-signal at a time of the year when the market forces there naturally tighten. Very high corporate debt levels mean the Chinese economy is very vulnerable to interest rate rises, and interest rate declines are very stimulatory. However, as others tighten, the Europeans are hanging loose. The ECB left rates unchanged today, no surprise there. It left all its monetary policy positions unchanged with the full QE settings. But it did raise its growth forecast for the EU to 2.4% in 2017, that's up from 2.2%, and to 2.3% in 2018, that's up from 1.8%. The latest EU PMI surveys are very expansionary, in fact at 7-year highs. Also finding the going better is Japan's manufacturers. Their flash December PMI is at a 4-year high, and Japan is about to push through a large corporate tax cut, apparently on the basis that this will allow companies to pay higher wages. And Canadians have woken up to hear that their household debt levels have been revised higher. The latest data shows them at 171.1% of household disposable income in September, and that's a record high. Before it was revised up, the June level was 167.8%. The equivalent New Zealand level is 167.5% as of September, and that's a reduction from June. Excessive debt is not only an issue for households, it is also a corporate problem, especially in China. HNA Group, known for its splashy overseas acquisitions over the past 2 years or so, is trying to diffuse market concerns over its debt pile and liquidity. The Chinese conglomerate said in a statement yesterday that it had met with representatives of 8 banks and policymakers to discuss the company's credit facilities for 2018. And we should also note that China's war on smog is having an unexpected impact on its agricultural sector. The drive to clean up their air has seen fertiliser plants close, and that has sharply raised the price of fertiliser and reduced its use. Demand for imported alternatives are rising, and as will the demand to replace lower rural production. In New York, the US Treasury 10-year yield is marginally softer at 2.35%, and the price of crude oil is a little changed today, now just over $56.50 a barrel, while the Brent benchmark is down to just over $62.50 a barrel. The price of gold is up another $8 to $1,253 an ounce. And the Kiwi dollar is also little changed at 69.9 US cents. On the cross rates, we're holding to at 91.1 Aussie cents, and against the euro, 59.3 euro cents. That puts the TWI at 72.8. And this is the final video version of 90 at 9 for 2017. We'll have regular holiday briefings each business day over the holiday period and be back with this version in a refreshed format in mid-January next year. So from all of us at interest.co.nz to all our many and growing readers and viewers, we wish you a Merry Christmas and fun holiday season. I'm David Chaston. That was 90 at 9 for 2017, brought to you by interest.co.nz.